For years, you've been fed a narrative about trading that it's all about skill, intuition, and picking the right stocks. You've probably seen the movies, read the books, and maybe even tried your hand at the markets, only to be left wondering why it never quite worked for you. Well, get ready to challenge everything you thought you knew. Because in this video, we're going to expose the truth about how Wall Street actually works. And trust me, most of what you've been told about trading is a lie.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
This is Wall Street Secrets, and it's time to expose the truth. Most of what you've been taught is known as external market data. That is, data which forms the outcome of the market movement. This covers everything from price action and indicators to trend lines and patterns. These are all created by the outcome of what the market is doing internally. What Wall Street focuses on, and never shares, is the internal market data. This is what really moves the market. Everything else is just noise, just irrelevant movements made within a larger move. The first piece of internal market data we're going to look at is called the advanced decline line. In simple terms, the advanced decline line is just adding and subtracting the number of advancing stocks which are going up, with the number of declining stocks which are going down. Then taking that number, you added it to the previous day's data. The data is added daily to form a number, which is then plotted onto a line. Here is an example of the advanced decline line. We're specifically going to look around April 7th, 2025. Here, the stock market had a series of big red days, and a lot of people were calling for a market crash. But, looking at the internal market data, Wall Street knew this was a good time to buy stocks. The S&P 500 had broken down below prior lows from April 19th and August 5th. Things were looking bad. But, looking at the advanced decline line, we can see that the advanced decline line was not making lower lows. In fact, it was still around the same level as it was around January 10th. This tells us that the market should return to a similar price as they were around January 10th, and once the advanced decline line made a new all-time high on May 7th. It indicated that the markets were going to make a new all-time high. And that's exactly what happened with the markets making a new all-time high on June 7th. This is simple and powerful data that can tell you which way the markets are heading. And this data has been used by Wall Street for nearly 100 years, first being used in 1926. Now, this is not meant to be used on its own. This is used in combination with other internal market data, as well as some external market data. If the advanced decline line hits a new high, it does not mean that the market will hit a new high the same day, or even the same week. It just means that the market is strong and will hit a new high at some point, most likely within the next few weeks or months. We will get into other tools and strategies in time, but for now, watch the advanced decline line and see where the markets are heading next. Spread the message and leave a comment as to where you think the markets are heading next.